Expect that many in our audience have heard of the digital asset Bitcoin, even if they are not sure what it is or why it's valuable. In the past 3 years, Bitcoin's price has been quite volatile. It has ranged from a high of around $67,000 to a low of around $16,000 and is now currently back to about $46,000. This week, the Securities and Exchange Commission, the SEC, approved 11 Bitcoin ETFs. An ETF, or exchange-traded fund, is a type of investment vehicle that is traded on stock exchanges, much like a stock. These particular ETFs are designed to hold and track the underlying performance of Bitcoin. The approval marks the first time this type of investment vehicle has been approved by a major regulatory body in the United States. Starting January 11th, investors can use their brokerage accounts and certain retirement accounts to buy and sell these funds. Bitcoin, the asset, was created around 15 years ago. The network allows individual investors to exchange value over the internet without a need for a custodian. A fixed supply enforced by network incentives makes Bitcoin a scarce asset similar to real estate or gold. The value of Bitcoin in part comes from its scarcity and its money-like properties. We should note that some of the money-like properties for Bitcoin ETF holders are not preserved. An ETF simply aims to hold the asset on behalf of the investor solely for price performance exposure, just as holding a gold ETF does not place a gold coin in your pocket to spend. BlackRock, Fidelity, and ARK are some of the more widely known names in the investment space. These companies, along with 8 others, now offer their Bitcoin funds for purchase inside of investment custodians like Charles Schwab. Just because Bitcoin ETFs are regulated and approved by the SEC does not make them without risk. The SEC clearly stated that approval is not an endorsement. The approval does, however, increase the legitimacy and acceptance of Bitcoin in mainstream financial markets. It offers investors a new way to gain exposure to Bitcoin without directly purchasing and holding the asset, potentially mitigating some of the risks associated with storage and safekeeping. Now you may be thinking, should I own Bitcoin in my investment portfolio? That's a fair question. We believe it ultimately comes down to individual risk tolerances, investment goals, and time horizons. At Vector, we have the experience and tools to help you bring clarity to your financial life.